Welcome, everybody. I wanted to go over a couple ideas for you that I think are going to be very helpful for you to line up your trades. Remember, have a trading plan and then trade that plan. That's the old, I guess, line that I've heard since I got in this business back in as a runner in 1977 and again working for George Lane, actually the creator of the indicator we're going to talk a little bit about today. I worked for George back in 1980 and 82, and I learned a lot, obviously. I had a great mentor, and so, therefore, I'd like to pass on some of the things that I learned that I think are applicable in today's market environment. But first, let's take a look. In order to figure out where a market's going to go, ask yourself where the heck's it come from, and what is the condition? First and foremost, that's what pivot points do, especially the person's pivot indicator. It just doesn't outlay pivot points, and I'm sure you're familiar with them, but there's a book that I wrote. Here it is. You've seen this book. This is going on 15 years, and the first book that I wrote was a little course that we put together for traders at the Chicago Board of Trading for my own brokerage firm at the time. Here's the thing. Pivot point analysis are great. They give us hidden support and resistance, but there's a little bit more about trading them that I want you to quickly learn. Every single course that I've ever put out to teach traders how to make money in the market is simply this. The pivot point, the blue line that you see on your screen here, in extremely bullish market conditions, it acts as support. It could be the low of the day. So if the market's truly bearish, like so, for example, person's pivots outlines lower highs, and again, it highlights lower lows. It highlights a lower high and a lower low. The trend is down. But when do trends reverse? Well, trends reverse if it's supposed to be bearish, then the pivot, the blue line, just like here, the pivot will act as a resistance. Let's review that statement right now. In an extremely bearish market condition, the blue line pivot will act as resistance. And that's what you see right there. Last week, it acted, the pivot, the blue line acted as resistance. But when the pivot starts to change and price start to trend over the pivot, it acts as support. So that's what we're going to talk about, because on Friday, here we have, look, higher pivot than the prior day, a higher pivot and a higher pivot. That defines an uptrend. So typically we want to do what? Be a buyer on dips in an uptrend. If the market's bullish, buy dips. It's a little bit more fruitful to go with the trend. But not always is that the case. So let's explain that and share with you the best way of trading counter trend trades in a bullish market environment. What we want to do is we want to look for what's called departure from the means. If the means is this pivot, the pivot point itself, when we get too far away from the pivot, then we want to look for ideas that maybe the market's been up for a long time and it's getting ready to roll over, or at least stabilize in a trading range. And it's exactly what we had today, a trading range, a 12-point trading range. Why is that important? Folks, we were seeing 12-point ranges every 5-minute bars back in December and January. The entire day today was about 12 points. That's a tough day for trading. When you start to see your average true range contract, it means one of two things. It means it's getting ready for a shift, a maybe possible reversal, or we're entering in a consolidation phase. A consolidation phase is not a great phase to look for breakouts. You keep a breakout, it does what? It buys the high and it sells the low. And in a trading range like this, breakout modes will kill you as a trader. That's where stochastics comes into handy, at least very helpful to help you line up trades. So first and foremost, the stochastic indicator, when it's over 80% line in the sand, so to speak, and the market price is departed away from that pivot, start looking for signs or clues that the trend is reversing. This is a case where we get a sell signal here, and number two, this is a volume indicator that you may not be familiar with. It's an extremely powerful volume indicator because it takes the change in volume in the marketplace in terms of percent change, filters that out, and there's a momentum filter behind it, kind of like as you can see with the histogram. So there's moving average lines and a histogram. When the histogram turns red, it shows clearly that there's a loss in the momentum of the market and the volume is going to the downside. It's pretty clear that you can see that red line in the sand. So, with that said, let's take a look. we get a volume decline. You say, well, person, I don't have that tool. All right, here's the key. Look at the stochastics. The KD crossed over. The market's overbought. So we would, at the very least, you can have the assumption that the market can possibly return at least somewhat, either test the low or go back to the means, the pivot. That's the case, and that's what this strategy did, by the way. Went short. This is the profit target. And just to give you a defined, at least an explanation of what the lines on this chart are all about, that is the first stop loss initiated by that sell signal. It's a stop above the high plus a few ticks. When the market starts to move in favor of our direction, this is the major profit target, which it takes a profit, and then it trails a stop on the balance. It trails a stop, it trails a stop, and that's the trailing stop. When the market hits that trailing stop, it's out of the trade. That trade right there, beautiful combination, and probably would tell, look at the overall stochastics reading on the upside here and the volume indicator. As this low and this low, you see number 1 point to the number 2 point. The number 2 point is lower than the number 1 point, and the volume is showing a shift in that momentum. There's buyers coming in here. Look at the stochastics indicator. Sellers there, buyers here. And we got a little uptrend. Again, sell signal here because why? Look at the stochastics location as I just taught you, and look at that unbelievable reading in the volume there. So the market wasn't really trending anywhere today, but by using these tools, both the volume and the stochastics, is a lot more helpful for all traders that are looking to succeed in the markets. I hope you found this video helpful. We'll have more of them to give you better insights on how to make money in the market consistently, safely, with the great results that you deserve. Thank you.